I think this is going to be the most important video I'll make this year. Whether or not you lost or made money during the crypto flash crash, it doesn't matter. What matters is what you do moving forward. It's going to be a long one, but in this video, I'll discuss how I was short the markets during the crash, how to construct an all-weather portfolio that can thrive in any environment, and where I think we are in the cycle. So let's get right into it. So last week we had a huge liquidation event, and fortunately for me, I was mostly stabled up and I hedged some of my long exposure with a bunch of altcoin shorts, which printed. I shorted roughly $90,000 to $100,000 worth of alts, and as you can see up top there, I made roughly 66K from this particular play, maybe a little bit off by a couple thousand, but yeah, I was very fortunate, and it was pretty crazy seeing how low these coins went. So these are, this is all on chain, so you can verify it, but I covered all these shorts, like Sui at $1, Say 8 cents, Starknet under 5 cents, IP $1.67, really crazy. I of course could have played it better, right? I think I could have longed any of these and at least 2x my money or something. But I was way too scared at the time because I had no idea what was going on. So I just ended up buying Bitcoin at 108. I sold it at 112, and now the markets are ripping. So I'll share my thoughts on the cycle later on. But I do want to focus this video around risk management and portfolio construction because I think that's where I can add more value. So I didn't really forecast this crash. No one really did, right? Otherwise it wouldn't have happened. But I've kind of had this view around being bearish Ethereum, and once Ethereum hits new highs, I just wanted to start de-risking heavily. And I had this view, once ETH breaks new highs, you have 3 months to take risk off the table. Of course, ETH hit new highs in August. We had this crash in October. Would I consider Ethereum hitting 4,900 to be a real breakout of all-time highs? I'm not quite sure, right? I do think ETH could hit new highs, but once that happens, then you really have to start taking chips off the table. I think everyone in crypto has this mindset that we're gonna hit new highs for Ethereum, and then we're gonna have maybe a month of alt season, and we're all gonna sell our crypto and then sing kumbaya. But I'm not sure how easy. I'm not sure if it's gonna be that simple. If everyone wants that to happen, then can it happen? Maybe. Who knows, right? The 4-year cycle has been playing out, but I think at this point, right, we do have to think about preserving capital instead of trying to be too greedy. I think a lot of people that were really greedy just got rinsed, and of course, we can't go back in time, but we can kind of think about how to construct our portfolio so that these things don't happen in the future. And of course, I'm Mr. I call myself Mr. Round Trip. I always round trip, but I was tired of round tripping this time. So a month ago, I mentioned that, I want to be at least 50% in stables at all times from this point forward, back in September. And then to hedge my bearishness, I wanted a long mantle. And, I'm not going to talk about the mantle thesis, but, it's Bybit's token, right? So they're going to it's Bybit's token. And then to hedge my long exposure and to also airdrop farm these perp DEXes, I wanted to short high FDV vapor alts, which is what you saw there. And I'll touch on the farmers always win section later, but I think this is the most important part that I've recognized over the years, is that I think on a risk adjusted return basis, farmers usually win. We see perp traders, meme coin traders, they make infinite crazy amounts of money, but we don't really hear about the times where they get absolutely hosed. But farmers, it's very steady Eddie, right? It's the turtle, the tortoise and the hare, right? The hare is the meme coin traders, and the tortoise is the farmers that just slowly grind up their portfolio balance over time. And that's who I would strive to be. And of course, I'm not wearing my farmer attire this time because, I kind of want people to take me seriously. And of course, maybe, anyways, yeah, the humble farmer portfolio, the TLDR is, I think, I wrote this, when was this? Yeah, September 23rd. But yeah, I think the most humble way to approach the markets is to just, take advantage of the really high stablecoin yields in crypto, because you can actually make a lot of money in stablecoin farming, right? You can 2, 3, 4, 5x your money. And then you also want a long, good coin spot, because I think we're all bullish crypto, right? But you have to be bullish the right crypto, which is the hard thing to do. And then, I think perp DEXes is a really good way to airdrop farm. And I think the best way to utilize perps at this point in the cycle is to short on very low leverage with a very small size. But I'll talk about this later. But anyways, going deeper on the humble farmer portfolio. And, by the way, this works for me. What works for you is going to be different. And then you can kind of adjust the parameters. That's why I kind of gave a range. But What I want to preach is for everyone to think about their portfolio holistically, not just their crypto portfolio, but also think about their stock portfolio and how their real life situation, like their jobs, right? Because you have to understand like where things can go wrong, because they could go wrong and will go wrong, and that's what we saw on October 10th. And I think what I've realized as I've observed crypto participants over the years is that people are generally way more overexposed to crypto than they think they are. And I think this is like a really simplified example, and this might not apply to everyone, but just as a storytelling exercise, imagine you're working crypto and you live in New York, because like this is like the crypto hub, right? I also live in New York, and let's say you have like $100,000 salary, just to simplify things, and a lot of your upside, right, as an individual comes from like the locked tokens, which might be vesting soon, which might be vesting. But like when the markets are bullish, it's like, oh yeah, like I'm going to be rich from all these tokens, right? And maybe this is like, the salary, this is like stock compensation. If you don't work in crypto, maybe, you made a few angel investments here and there, right? Little moonshots. And then, your portfolio is mostly or all in crypto. This type of person, right? This archetype is heavily exposed to industry risk. And I do think it's important to think about that. And they might not be risks, but it's just the amount of exposure one has, and then how to think about downside. Because it's not all about like what's going to happen to crypto tomorrow or next week. It's about how do I put myself in a position to minimize downside and to also maximize upside across all time horizons. So going back to this, right? When I posted this, I think a lot of people gave me gave me flack, because it's like, oh, like you're gonna miss this guaranteed Q4 pump. You're going to be sidelined. And of course, if you just look at my portfolio in a vacuum, you might think that, right? I'm short some shitcoins that might pump, I'm stabled up, and I'm long this mid-curve token that might not even pump that hard. But going back to the farmers always wins, you can actually be risk off and have asymmetric risk return exposure in crypto if you're a farmer. Let me explain. And this is very, very specific to my portfolio, but I think it also applies to a lot of my viewers, because I lean more on-chain, DeFi native, and I do think that I didn't really think about the markets this way in the past couple of years, but and maybe it's like I've matured and I've gone older or something, but I start thinking about this more, and that's kind of what allowed me to not be too greedy and take profits, and also become, I guess, lucky, right, by shorting things. But let's talk about what I've been farming, right? These are airdrops. Or maybe not all airdrops, but I've been farming Perp DEXes fairly aggressively, lighter and variational, USD AI and Plasma. Plasma less so, but let's first talk about the Perp DEXes. So unfortunately, I mean, I'm very lucky, right? I'm in a really lucky position, and yeah, I mean, this is very, very, very lucky. But fortunately have 5,000 lighter points as of now, and before the crash, these lighter points were trading at roughly $100. So I had like $500,000 of like imaginary lighter wealth that wasn't really in my portfolio, but it was there, right? Because apparently the token generation event is happening later this year or early next year. So, I mean, I could sell them, but I mean, it's very illiquid. But like, this is like a type of hidden exposure that I had in the future, right? Future Taiki receives this, current Taiki does not, but it's still a part of my portfolio or like my net worth. And the way to think about it, or the way I was thinking about it, is, I mean, we're already at such high valuations across crypto, and I want to take risk off the table. But I'm not going to be sidelined, because if the market pumps, my lighter points might be like $200, right? And I get like $1 million airdrop. So it's like, yeah, I'm stabled up, but I still have a lot of exposure. Also, if we enter a bear market, which who knows, maybe we are, right? My lighter points are going to maybe be worth like $50 or something, right? And I'm going to be drawing down like pretty heavily. So if that's the case, like, why do I need to take a lot of risk, right? Because yeah, I mean, if the market's nuked, then at least I'm in stables, and I get like a smaller airdrop size in the future. But if the market pumps, then I'm just like chilling, right? And I think there's a lot of people in crypto that had a lot of these like lighter or airdrop points or like whatever, right? That just like was way too greedy, and they were like 2x long or something, right? And they just got liquidated. And now, right, if we enter a bear market, then their lighter points might be lower. So they were like a lot lever long crypto than they actually were, right? Because maybe, in a vacuum, they were like 1.5x long crypto. But no, like you were 1.5x long crypto and you had these lighter airdrop points. But like you can like protect yourself by just taking profits, because if the market rips, your airdrop is going to be worth a lot more. So by default, when you're airdrop farming or farming in crypto, you're essentially long alts, right? Because the only way you receive really good high like yields in stablecoins or airdrops is if the altcoin market is pumping, right? If the altcoin market pumps, your airdrops will print. If we nuke, it's not going to print. So there's a lot of like risk, right, when it comes to airdrop farming, as it relates to, or there's a lot of reliance on the altcoin market when it comes to airdrop farming. And now, right after the nuke, now the bid ask offer, or sorry, the bid ask spread is like pretty wide, and now it's trading at like $75 or something, right? So maybe I did draw down, right? Because now like my lighter points, according to the market, is like down 20 to 25%. But hey, like I was able to hedge by shorting altcoins. Maybe I can like, short them again, or maybe I can like buy the dip. But I was able to hedge this part of the portfolio because there's general market and like beta risk. So that's kind of an interesting concept that maybe you can apply to like your other positions. Another thing I was doing is farming USD AI. And I think a lot of people in crypto assume that stablecoin farming has no upside, maybe, 10, 20% yields, but you're a boomer, right? You can't really, get like a 2, 3, 4x. But contrary to popular opinion, like you can actually make insane amounts of wealth via stablecoin farming. And let me give an example. So one thing I'm doing right now is, farming USD AI. And I'm not going to get into like what the project is, but basically, you hold the stablecoin, you LP, you do DeFi things, and then, you get points, and then you can either participate in the ICO or, get some airdrops essentially. And I'm doing both right now. I realized a couple weeks ago, or maybe like a month ago, I made this video that wait, like there's so much demand for this particular farm that if I can just mint this for $1 when caps open, I can just like ape size into this with basically zero downside and then be able to flip it for a small gain. And not only that, give myself the optionality to farm points for the airdrop / ICO. So, now USDAI, I minted like $500,000 of this at like $1, and now it's trading at like 3 to 4% above peg, and it's still paying 44% APY. Of course, if you're entering this now, you are paying a premium to get in because it's trading at a premium. But that's the point of like just being fast to these things. And sorry, like this quality is like very poor. But yeah, like I put $500,000 into this. I sold 200K of USDAI into 204K. So I put 200K in and I got 204K out. And I still get to keep my airdrop points. And with the other 300K, right, I'm still farming the ICO points. And, if I were to get out because it's trading at a premium, I would pull out like roughly $308,000 plus, like Pendle emissions and whatnot, which is like pretty crazy, right? I mean, think about like making like $12,000, $13,000 by buying a stablecoin, right? And you also get upside, in the airdrop and the ICO. And talking about the ICO, like I said, right, you can get asymmetric returns in stablecoins. Sometime in the future, maybe like January or February next year, there's going to be this ICO, hopefully, right? And if the market just nukes, right, I'll just like dump the airdrop and just fade the ICO because, if the market nukes, the altcoin market is dead, and then these coins are not going to be worth that much. However, right, if the market pumps, crypto degens are going to just pile into this token. I mean, we saw this like many times, and this is like an example, right? Where yes, you're entering a stablecoin farm, but you're giving yourself the optionality to participate in an ICO where if the altcoin market is hot, you can just max ape into the ICO and just flip it like whenever they do launch the token. And one example was like Plasma, right? XPL, like, people were talking about how it's going to go to $1 trillion market cap. It's Tether chain. It has to go pump. It has to pump, right? And then it was all over Twitter. It was all over YouTube. And then, degens just aped XPL token and sent it to like a $16 billion FTV. And then what happened was farmers dumped because farmers were able to farm this with stablecoins, and then like just like the degens like pumped it at such a high valuation. So of course you're gonna dump, and of course like the degens that bought this thing, they're calling the team scammers, and no, like they're not scammers, right? You just bought an overvalued token and you got dumped on by farmers. Like that's your like that's literally on you, right? Because what ended up happening was 10% of the supply was sold in a public sale, and the only way to participate in this ICO was to just bridge stablecoins. So a lot of people, I know a lot of farmers, they just like aped into this, right? Just let their stablecoin sit there for a couple of months and then just like full blasted into this ICO, and then bam, right? They literally 30x their money, right? Because the degen sent it to a 16 bill FTV, and then like they just like made a couple 100% APYs, pretty insane. And what risk did they take? Not much, right? Of course, there's some opportunity cost in the stablecoins, but I mean, to get those types of returns is pretty crazy. And this is like a good transition to perp DEX farming, because yes, perp DEX is more risky, and we've seen people just get completely rinsed, right? So I'm not really advocating people to like lever long or like leverage trade. I'm more so trying to utilize, okay, how can I incorporate perp DEX farming into my holistic humble farmer portfolio strategy, and then incorporate elements that just make my portfolio like an all-weather portfolio. And I mentioned in my last week's video that yes, I put like 455k of tether into Plasma, because it was like paying roughly 11% APY. It seemed okay at the time. And as you can see in the video, I mentioned that like there's all these incentives like farms, right, where all you have to do is deposit tether, USDT, and then the Plasma team is just like printing tokens, right? They're just like handing it out to you to incentivize TVL. And if you really think about it, right? It's like, who's buying this? Like literally the team is inflating tokens every single day, and like people are aping. It doesn't really make any sense. So I think using the chain actually allows you to understand the market structure of crypto, and like ask yourself like questions, right? It's like, why are people buying this? Like, is it a good decision to buy this thing above a 10 billion FTV? And if you're a farmer, like there's no way in hell that you were buying this, right? In fact, I was shorting because I knew that these incentives are crazy. And of course, if you look at the incentives now for Plasma, they're down a lot. And this is like one of the reflexive, I guess, like spirals that happens in crypto where, yes, to incentivize TVL, the team is printing XPL rewards, which is fine. This is like a good bootstrapping mechanism by the team to get liquidity. So it's like nothing on them, right? They just print tokens and they're handing it out in exchange for TVL. Of course, farmers like me, we're going to dump our tokens because that's where the yield comes from. And then the question is, if XPL dumps, what happens to TVL, right? Most of the TVL comes from these rewards. Farmers will dump these rewards. And then if the token dumps, then the APY goes down. So TVL should leave. So it's kind of like this reflexivity in crypto where, yes, in order for the chain to function and for the chain to have good TVL, the token has to be at a high valuation. But if farmers dump it, which they should, then the TVL goes down. And then the fundamentals of the chain looks a lot worse, right? Because when the token, right, when XPL was trading at a 16 bill FTV, the fundamentals look amazing. Wow, there's like 4 billions of TVL, it's paying 10% APY, Tether chain, it's going to trillions. But now, right, the token's down 70%, and then TVL is leaving. How do the fundamentals look now? Like I said, I have nothing against the Plasma team. Who knows, like maybe they pull it off and, they're like the neobank chain. But in the short term, it's just a farm token. And you can kind of, so, because I was farming Plasma, right, I was being paid this 11% APY paid in the Plasma token. One way, right, I could hedge that yield is like, like I don't even want to own this token, so I can just short this thing on perps, right? So that's kind of what I did. So on variational, I shorted Plasma, which was paying like 50% like funding at the time, to effectively lock in my rate, right? Because I was going to dump these tokens anyways. So let me just pre-dump them by shorting them on perps. And if the token price goes up, then I can short more, and like I can dump my tokens at a higher price. And if the token dumps, then at least I'm making money on my shorts. So it's kind of incorporating the stablecoin farm, right, with like the Plasma, and then also adding like an additional layer on top, right? Where like I'm farming two things at once, stablecoin farming Plasma and then dumping Plasma via shorting essentially, and I get points that way too. And then like I said, right, once I bridged the Plasma, I'm like, wait, like how is this thing $10 billion? So I just like kept shorting. And if you look at my short basket from October 10th, Plasma was actually like my biggest win in terms of shorts. I think I shorted like 10K worth, and then I made like 7K. And yeah, like I said, I'm not dunking on the team, right? I'm just like, talking about the token, right? Because the token is different from the product. All right, so yeah, by the way, I really didn't predict these coins going down 70%. I think I did get really lucky here, because I thought these coins were going to go down 70% over the next 12 months, right? Not over the next 12 hours. But hey, like, I did put myself in a position to get lucky, right? And to hedge my portfolio. And that's what it is, right? A hedge is just a hedge for the markets going down. So when the markets go down, there's a payoff there. And also, right, the beauty of DeFi is that, yes, like, once you use the chain, you kind of get a better understanding of where the yield comes from, where the demand is coming from, and whether or not the fundamentals and the valuations make sense. And I still think it's worth farming perp DEXes. I think a lot of people got liquidated using perps in the past few days. So the natural reaction by those people will be like, yeah, like it's all a scam, right? None of these are going to be worth anything. But obviously perps have insane product market fit. Hyperliquid is not going to have 90% market share for over the next 10 years, right? There's going to be competitors. So I do think it's still worth farming these perp DEXes. I'm farming lighter and variational right now. I could farm more in the future, but I'm just trying to focus on a few things just so that I'm not spread out too thin. And variational, since I talked about variational on my channel, the TVL has gone up a bunch. OI has gone up a bunch. I'm not being paid, right? I'm just a humble farmer. I don't do sponsorships or ads on my channel. But hey, it's a good product. When the markets were nuking, I was able to close these positions, buy Bitcoin. So it worked. So that being said, I talked about farming, and you still might be kind of skeptical of like farming, right? It's like, you're only like nitpicking the good things about farming. You could get rugged, right? I still want to buy altcoins and get like 100x or like whatever, right? Which I do that too, right? I was like long Farcoin like earlier this year and stuff. But I think this isn't even a crazy take or anything, but there's so many problems with the market structure in crypto, and I think that is why we have to farm, or at least for me personally, that's the conclusion I've reached. It's very overpowered, and I do think the markets are rigged, right? Every market is rigged to some extent, but crypto more so, especially if you are participating in certain areas of the market. First, 99% of alts overvalued. We know this. Second, new coins launch at an insanely high valuation, meaning that you can't really make money buying these coins when they launch. Number three, most coins' utility is to be dumped, right? Either by farmers or VCs or insiders. Number four, the rise of insider trading. So we'll kind of talk about this over time. But yeah, I think the story of the cycle has been altcoins getting wrecked, right? No alt season has happened. We've had pockets of alt season, but it's not really like the alt season we had last cycle. And Bitcoin has continued to take market share over time. And I think, myself included, we're becoming Bitcoin maxis very, very slowly. And the reality is, most alts are just like not great, right? Like I said, right? They launch at a way high of a valuation, but people still speculate, and I think that's kind of why people keep doing this. If people stop buying altcoins, there has to be a buyer strike somewhere, right? Or at some point. It kind of like the altcoin market kind of reminds me of this Kurt Richter rat experiment, where this guy put these rats in water tubes, and then on average, right, without any intervention, they'd give up and sink after 15 minutes. However, right, if he reran the experiment with a twist, so right before the rats gave up due to exhaustion, he kind of pull them out of the air, or so pull them out of the water, and just kind of took care of them, right? Gave it some food, brushed them off, and then he put it back in the water, the rats. And in the second try, they had just swam, or after they had just swam until failure, only a few short minutes earlier, they lasted on average 60 hours, right? So once these rats had a taste of survival, right? Once they've had a taste of success in a single thing, right? They just keep believing, right? It's kind of like altcoins, right? It's most altcoins get nuked, right? But once someone has one decent win in alt, it's I'm a god, right? I'm gonna keep participating in this altcoin casino. But the reality is, we're like a rat, right? In this water. It's rigged against us, but we keep participating. Why? And of course, I'm not really discouraging people from buying altcoins. I'm long on altcoin. I'm gonna continue buying altcoins because that's what I do. But at some point, right, we have to realize that, these coins are meant to be just ignored for the most part. And also, this isn't meant to be, a pessimistic hate, right? Because there's always a counter, right? If the market is launching all these things at these insane valuations, the best way to counter this, I mean, some people will say like buy meme coins, but the best way to counter this from like a more sustainable, right, portfolio view is to farm these tokens, right? Because yes, all these things are launching at like 10 bill FTV. What should we do? All right, why don't we farm it and then we can dump it at the high FTV? Crypto is not easy anymore, unfortunately. I've learned this the hard way. Last cycle, you just buy anything, it went up. This cycle, you buy anything, they mostly go down. It's really hard. But that's the natural evolution of markets. Markets get more efficient over time, and it's going to get harder over time. So, if you don't adapt, you're going to die. And lastly, the rise of insider trading. And I felt this really, really hard in Singapore. So I fortunately had the opportunity to speak at Token 2049. It was a great time. And I met a lot of interesting people. I met a lot of fund managers. They manage tens and hundreds and sometimes billions of dollars. And I met a lot of famous traders. Some of them that you might even follow on Twitter or X and whatnot. And I was like kind of asking them, yeah, like what do you like right now? Are you bullish to markets? What are you long? And for the most part, a lot of people said, oh, like I'm long XYZ token, and I'm like, what, like that? Like, why? And they would tell me and be like, oh yeah, like I'm long this token because this is going to happen in 2 weeks, and I'm just playing it for a catalyst, and then I'm going to dump it, right? So it's kind of like this catalyst trading. But the thing is, like the catalyst that people were talking about, they weren't like public information, right? And if you really think about it, there's more fun. There's like more money pouring in crypto, which means that there's like more analysts and traders, right? Trying to eke out any information, any edge, any alpha that they can get out of the markets. They're talking to the teams. They're talking to like whoever, right? Insiders to figure out where can I like make money. So in that environment, right? Imagine like maybe, I mean, this is like a gross oversimplification, but like maybe imagine a year ago, there's like 1,000 analysts, right, trying to seek out alpha. Maybe this year there's like 3,000 analysts trying to seek out alpha. It's gonna get more competitive. It's a lot more competitive, and I mean, I realized this last year as well, but I feel like my edge in liquid markets are just slowly deteriorating. I mean, with like the mantle long, I mean, that thing is working out, but I mean, maybe that's just luck, right? Maybe that's just noise. And it really, like the Singapore trip really made me like think internally about like, what is my edge? Like, how can I actually make money from the markets when the game seems to be rigged against me? Do I just go back to Bitcoin? No, my edge, right, is farming and using the chain, because what I've also realized is that these fund managers, these traders, they don't really farm, right? They have these takes around catalysts and like, Bitcoin price action and whatever, but they're not really farming. I mean, they definitely weren't farming Hyperliquid. They weren't farming Lighter. They're not farming like Polymarket or Variational or like USD right? They're just like buying and selling and just making money, which is great for them, right? That's their edge. But maybe that's not my edge, right? What is my edge is literally just being a degenerate, putting on my farmer hat, like holding onto this rake and just like buying stuff. Sorry, my pen fell, or like one of my farmer equipment fell. In markets, generally, we get paid to do things that other people don't want to do. A lot of people in crypto, they want to just buy coins that get shilled on like social media and just like make 10x, which, I mean, it sounds great, right? I mean, that sounds like a really easy way to live life. But those days are gone, I think. You could get lucky, but I think it's mostly gone. And realistically, like no one wants to airdrop farm, right? It is a lot of work farming these things. It takes a lot of time, it takes a lot of capital. You could get rugged, and it's not that fun. I mean, sometimes it's fun. It's not that fun. But hey, like that's what we're paid for, right? If it was really easy, then everyone would do it. Like these things only have these crazy payoffs because it's hard to do, and people don't really think about it ahead of time. That's kind of what I meant when I say farmers always win, right? And also to think about the portfolio holistically. It's okay to have a lot of stablecoins because guess what? Maybe you're farming a bunch of things and you're gonna get an insane payoff even if you're sidelined if the markets continue to go up. But hey, if the markets go down, yes, your airdrop is gonna be worth less, but at least you're stable up, right? Of course, you don't want to get too bearish. That's why I still think it makes sense to hold good coins, and also like maybe like hedge like some long exposure by shorting things if you want to, right? It's all optional. But I do think that I realize that farmers always win. On a risk-adjusted return basis, there's a lot of farmers. People say you have to survive in crypto, right? I've seen a lot of people like just blow up and leave. But I think farmers generally, they just survive, they kind of have this like really steady equity line, whereas like a lot of traders, like, it's like pew, 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 right? Up and down, up and down. But farmers, we kind of have like this steady equity line, and sometimes we make a bunch of money, right? And then we just keep going up, and that's the kind of man I strive to be, honestly, because yeah, early this year, I think I was taking on way too much risk. I think I did open myself up to the risk of ruin. Fortunately, I did have risk management, or good enough risk management, to like not completely get blown out. But I think early in the year, if like a minus 80% event did happen, I could have just gone like destroyed. But I think, the point of markets, and the point of crypto is that the markets are ever evolving. We have to adapt. If you don't adapt, right, then you're going to die, right? Like actually, like if you're operating in 2025 under the assumption that like a 2021 market, style market is going to happen, then you're going to be very disappointed. And if you're still holding like coins from last cycle that hasn't recovered, then it's just never going to recover, right? And we just have to move on, right? Like even like the recent drawdown, right? Even the flush. If you lost a bunch of money, you can't go back in time. You have to move on, right? Like learn, just get better, right? And for me, it took like 3 or 4 major round trips for me to finally learn. And fortunately, this isn't like, like me just getting lucky. Hopefully, I can manage like downside. And like I said, I think I made a video like a couple weeks or months ago talking about how I felt washed, right? I'm like, I keep buying these coins, and I work really hard on like these theses, and I get absolutely stuffed, right? People are dumping tokens on me, and I just like felt like really low confidence about myself. But I think, I wouldn't call that like rock bottom, but it was like kind of like an emotional rock bottom. And coming out of that, I think I was able to adapt to the markets, and I'm like really proud of that. And I think, like a lot of you, maybe you're feeling down or like right now or something, right? But things always get better. There's like a saying where, whenever something bad happens to you in the short term, it always feels really, really bad, right? It's like the worst thing ever, and I'm never going to recover from this. But if you take a step back and you think about the bad things that's happened in your life 5 years ago, 10 years ago, it doesn't really feel that bad, right? Because yeah, when we feel things in the moment, it feels terrible, but we all move on, right? Like money is money. We can make more, it's fine. We're all young. I mean, I'm assuming we're all young, right? Like we're going to have growing pains, right? Like, losing money is the best tuition. And, hopefully like I'm still like my YouTube channel, it's ever evolving, right? I kind of change content here and there, depending on my market views and like how I'm feeling. But like maybe as I grow older, right? Maybe like the best way to help people isn't really by talking about like random altcoin picks, but also just to talk about portfolio strategy and like hedging strategies and like farming strategies. Because I think that type of that side of crypto, I think is not talked about enough. And I want to deliver that to you. I mean, hopefully we're in a bull market, right? Because like I said earlier, if we're in a bear market, then the yields are going to collapse, and it's going to be really, really hard. So let's talk about where we are in the cycle. Have we topped? As I mentioned earlier, right? I did mention that once Ethereum hits new highs, right, take profits. But who knows? Like maybe we have one more leg, and then at that point, we definitely have to start selling. But like I'm positioning in a way where if we pump, I'm happy. If we dump, I'm happy too, which I think is like the correct positioning. And I posted this last month, but I think this quote is very important. For one thing, we usually act too quickly when we are trying to make money, and too slowly when we're trying to protect our money. When you're pressed to make a decision, ask yourself, am I doing this to protect my money or to make more money? If the answer is to protect money, act more quickly. If the answer revolves around making more money, act slowly. And yeah, I mean, it's pretty self-explanatory. When we're trying to make money, we have to take a slow and methodical approach, right? Like farming feels too slow, right? We want to make everything right now. But hey, it's like near guaranteed returns over a long enough time horizon. But also like if you're trying to take profits, you have to do it really fast because yeah, I mean, in like 5 hours, like things can go down like 80%. But anyways, like my views on the cycle, I mentioned this a couple days ago, but yeah, I mean, I think alts are just cooked. I mean, I've had this view before, but like, I mean, alts literally went to zero, a couple days ago. So I'm not sure if like shorting alts makes that much sense. Like to be transparent, like I'm short some coins right now and I'm like underwater. Like my view is that I think Bitcoin has transcended like the 4-year cycle. And I think it's just going to grind higher, but I think there's a lot of capital chased alts, like very, very overvalued alts, believing in this four-year cycle. So if people don't see that, like this final parabola leg in alts, I think a lot of people are going to capitulate, because I think everyone generally understands in crypto, right, that most things are overvalued, but they continue to hold it because they believe in one last pump. So it's like kind of like this three mentality of like, okay, like if we all hold together, like this shit's gonna pump. But as soon as people start dumping, like, it's gonna be pretty reflexive on the way down. So I think Bitcoin is fine. A few select alts are fine, but most alts are cooked, and that's kind of why I'm mostly stable farming with some opinionated exposure in Mantle, and then like shorting shitcoins. I think it really is like a Bitcoin and farming meta that we are in right now. It is kind of weird to see things like BNB. So this is, BNB literally hit an all-time high earlier today. It's pulled back a little bit. So like if BNB, right, is like hitting new highs after the flush, are we really in a bear market? I'm not quite sure, right? And then the other coin like Mantle, I hold, is also like recovering fairly strongly. However, a lot of people have compared the recent crash to that of May 2021, right? Because, if you were back then, it was fairly brutal. You wake up, or for me personally, I woke up and like my coins were down 50%. It was pretty crazy. So, similarly, we kind of had that type of event where, you look away, come back, and then like, it's like random shit coins where like Atom went to like a penny, right? Pretty crazy. So pretty similar in terms of like the flush and the unexpectedness of the move. And yes, the markets are pumping right now, but back then in May 2021, Bitcoin pumped 10% after just everything nuked, right? And I remember this moment. It's like, oh, we bottomed, like we're good, or, like new highs soon, right? It's like, oh, Wagami energy, and that's kind of what we're seeing on Twitter right now, or social media, right? It's like, oh, like that was the flush we needed. We liquidated the plebs. Now let's pump it, right? V-shaped recovery to new highs, alt season, right? But the thing is, first of all, no one really knows what's going to happen. And the people that are calling for this new V-shaped recovery alt season were like long alts like 10 days ago. So like, what even is going on, right? I honestly have no idea. And going back on like this Mantle and BNB price action, because I'm focused on these two alts because both Mantle and BNB were like the two strongest coins leading up to, or the two strongest like high caps, right, leading up into this dump, right? And if you follow my channel back then, you also remember that I was a big like Matic guy, Polygon guy. Of course, in 2025, no one cares about Matic, right? But back then, it was the future of finance. It went up 100x. And what happened back then was that Matic was the strongest coin in all of crypto, leading up to the May 2021 crash. And then it went down like 80%, And then after the dump, it literally pumped like 3x and basically hit new highs, or like almost hit new highs, right? Like on the initial like bounce, alongside the rest of the market. And then, once the market realized that we're not going to V-shaped recover anytime soon, as you can see, we dumped in May and then we kind of bottomed around August. If you kind of look at Matic now, right, we kind of had this crazy bounce and then we kind of like rolled over into like July to August. I think this is the biggest risk to the markets right now, where we have all these people like hoping for like this V-shaped recovery alt season, and people are going to like just buy into like this big bounce. But as soon as people realize that, wait, like the altcoin buyers are gone, I think that could like lead to like a rollover in alts. But by the way, like, notice that I'm like talking about alts, right? Not Bitcoin or like Ethereum. Even though I lean more bearish Ethereum, but like, I don't have a strong view on Ethereum. So like as I said, I think my view is that like majors might be fine, but alts are absolutely cooked, right? Like literally all these coins went down 70, 80, 90%. Who's going to want to buy them? Who's going to want to like hold them? I think it's fine to trade these things, over like a 2 week or 2 month time frame or something, 2-day time frame. But like, the emperor has no clothes, right? Like there is no bid for all, like any of these things. Like they're all like overvalued as shit, even still, right? Even following the bounce. So, yeah, that's kind of my views. And then, I'm friends with like Jason Choi and Daryl Wang, like the Tangent guys. And they came up with this little infographic, like this chart, that I thought was like pretty helpful. And it's been pretty spot on in terms of like how cycles work. And let me go through phase 1 through 5. So we can kind of like, experience this together. But, in the early bull phase, we have markets reacting to good news, bad news not taking us lower. We start pumping. There's some consolidation, and then we have some crazy parabolas, and then people get euphoric, right? And then phase 3 is when the distribution happens, where a lot of people are going like max long, right? Because they believe in alt season. There's a bunch of like these PvP games, while the majors are starting to stall out. Crazy, random like things pump, and then like the last marginal buyer step in, and then maybe this is like the plasmas of the world, right? Like the random perp DEX coins, right? Where like we had like these vertical parabolas, and then we kind of stall out, and then boom, right? People get wrecked, and then we enter like this phase 4. Wealth destruction, the down chop, where this new regime is like, the transition is marked by like a huge liquidation, which I think we saw a couple days ago. In this environment, following a big flush, we're going to see big bounces, but at some point these positive news are going to get reversed. The buyer base has very little confidence around like the short-term price action. So if there's any unrealized profits to be made, right, they take them, and then it kind of leads to like very, very choppy price action. Some bodies begin to surface, leading to more bodies. We have no idea, we have no idea what the aftermath of like the October 10th events are. Maybe no one died, as in blew up, right? Maybe some people did, right? We only will know. Following like the Luna crash in May of 2022, right? We found out about Three Arrows Capital in June, and we found out about FTX in November. It takes time for these bodies to float. If there are no bodies, then we can resume. If not, who knows? And then phase 5 is kind of like this lull phase, where we kind of just chop back and forth, and then eventually, after enough time, we can go back to like phase 1 of like the bullish phase. So I think we're kind of in phase 4. Maybe we finished phase 4 and now we're in phase 5. And I just have this view that if the majors just go sideways, I think alts get cooked like this, right? As in, Bitcoin bounces, right? It goes sideways, alts bounce, and then it gets absolutely destroyed. It's something to at least be aware of, right? I really don't like being bearish, right? I think my entire lifetime in crypto, I've kind of been like this rational optimist or like perpetual optimist, and I'm like always bullish, right? But also like that's kind of what led me to these huge drawdowns. So I think maybe as I've become more cynical about some aspects of crypto, it's allowed me to protect some gains. It's probably going to lead to me losing out on like crazy upside. But I think I'm fine with that, But I think that's kind of how people evolve over time. I think what I've realized is that, when you first enter crypto, you're just like buying stuff because you just want to make like crazy gains. And you have no like risk management. And then you like blow up, and then you're like, fuck, I can't do this again. And then you try to buy stuff again, and then you pump, then the market pumps, and then you round trip again. It takes like 2 round trips to finally realize that, wait, like I'm doing something wrong here, right? There's something wrong here. And I think I realized after like the Farcoin round trip, I think that, wait, like I'm probably doing something wrong, where, I seem to be making money over time, but like the volatility is too much for me. And I think I've kind of, settled on this humble farmer portfolio, which kind of makes sense, at least for me. I don't even know how long this video is, but hopefully this has been somewhat helpful to you guys. It's at least like the way I've been approaching markets. And, I think, we can't really predict tops. We can't really predict what's going to happen in the short term, but we can just put ourselves in a position to just win in any scenario. I think that's all we can do, right? Anyways, that's going to be it for me. Oh yes, I forgot about this slide. And like my mental framework right now is I'd rather be like sidelined, and like if I were to be wrong, I'd rather be wrong like being sidelined than be like wrong being max long, right? Because I can always buy back in, right? If Bitcoin hits new highs, if Ethereum hits new highs, then yeah, we're probably going to see like a few months of crazy alt season or whatever, right? So I'll just like buy back in, whatever, right? But if I'm like max long now and I'm like wrong, then damn, dude, like stuff like this can happen, and it's going to be brutal. So yeah, finally, like what's next, right? what to farm, yada, yada, yada. I think the next biggest opportunity is in poly market. And I mean, I've talked about poly market over the past few months on this channel, but I do think it's something to like look into. When I started farming poly market, people clowned me. It's like, oh, poly market's not going to do a token, they're an IPO. But hey, guess what? Now Shane, the founder of poly market, teased this token, and then there's like an announcement that they're going to do a token, right? I mean, they're going to do a token. They raised at a $2 billion, or they raised $2 billion at a $9 billion valuation, meaning that the token's probably going to be worth like at least $10 billion at launch, right? Hopefully. So what does that mean? Farmers are going to eat, right? Farm good projects will be worth a lot, which means farmers will cook. So right now I'm airdrop farming USDI, poly market, lighter, and variational. I'll probably farm more stuff in the future. I'll let you guys know. But hopefully this video was somewhat helpful, right? Thank you for watching. I know these videos get pretty long, but sometimes I think these long videos are necessary when the markets are this volatile. I'll be honest, I have no idea what's happening. I have no idea what's going to happen. I lean more bearish right now, but hey, strong opinions loosely held. If we start pumping, I'll just top blast, and then I'll be exit liquidity again, right? But like I said, I'm going to keep over 50% of my portfolio in stables no matter what. So I can't get wrecked too hard, at least, right? And I think, that's the goal, right? You want to put yourself in a position where if we go up, you're happy. If we go down, you're happy. If we go sideways, you're happy. And I think DeFi, airdrop farming, like all these on-chain tools allow us the opportunities to hedge and give us these opportunities for asymmetric upside in the form of airdrops. So thank you guys for watching. See you guys next week, and hopefully everyone's doing okay. And we will make it back together. Wagami energy. Even though I said earlier that Wagami energy might not be happening right now, but hey, take things slow, right? Thank you guys. Bye bye.